Hello and welcome back to UIE TV channel. Please subscribe our channel to get further videos automatically in your inbox. Apple has €13 billion Irish tax bill overturned. Apple has been told it will not have to pay Ireland €13 billion, £11.6 billion, in back taxes after winning an appeal at the European Union's second highest court. It overturns a 2016 ruling which found the tech giant had been given illegal tax breaks by Dublin. The EU's General Court said it had annulled that decision because the Commission had not proved Apple had broken competition rules. It is a blow to the European Commission which brought the case. However, it has 14 days to appeal the decision at Europe's top court, the European Court of Justice. This case was not about how much tax we pay, but where we are required to pay it, Apple said in a statement. We're proud to be the largest taxpayer in the world as we know the important role tax payments play in society. The Irish government, which had also appealed against the ruling, said it had always been clear Apple received no special treatment. The correct amount of Irish tax was charged, in line with normal Irish taxation rules. EU Competition Commissioner Marguerite Vestager, who brought the case, said she would study the judgment and reflect on possible next steps. She added that the Commission stands fully behind the objective that all companies should pay their fair share of tax. The European Commission brought the action after claiming Ireland had allowed Apple to attribute nearly all its EU earnings to an Irish head office that existed only on paper, thereby avoiding paying tax on EU revenues. The Commission said this constituted illegal aid given to Apple by the Irish state. But the Irish government argued that Apple should not have to repay the back taxes, deeming that its loss was worth it to make the country an attractive home for large companies. Ireland, which has one of the lowest corporate tax rates in the EU, is Apple's base for Europe, the Middle East and Africa. In Wednesday's ruling, the Luxembourg-based General Court sided with that position, saying there was not enough evidence to show Apple had received illegal state aid or minimized its tax bill. One rather curious feature of this case is that if the ruling had gone the other way, and Ireland had been on the losing side, its punishment for breaching EU law would have been to receive a large amount of money, taxes the Commission said were owed by Apple. That did not happen, so the ruling, subject to any appeal, means Apple doesn't in law owe the money, so Ireland won't get it. In some quarters of Ireland there will be relief that an agreement that helped encourage Apple to invest has not been overturned after the event. But the sentiment is far from universal. A Sinn Féin spokesman called it a bad day for the Irish taxpayer that would draw negative attention to the country's international tax reputation. The ruling could spell bad news for Ms. Vestager, who has spent much of her time in office campaigning against tax schemes she argued were anti-competitive. Last year she lost a case against Starbucks, which was accused of owing €30 million in back taxes to the Netherlands. Rulings on IKEA and Nike's tax arrangements in that country are due soon. Jason Collins, partner and head of tax at law firm Pinsent Masons, said, Apple's victory shows that European courts are unwilling to call beneficial tax regimes state aid, even when designed to attract foreign investment, provided they apply the rules consistently. This will be a very welcome outcome for other multinationals who have been watching this case closely. However, he said Brussels was likely to appeal and EU efforts to tackle tax avoidance would continue. We expect the EU to continue applying pressure in this area, he said. Thanks for watching Universal Information and Entertainment TV. Please like and subscribe our channel for more updated videos, news, information and entertainment. See you in next video. Stay tuned.